It's NFP Friday, and what a messy Friday it is, as US NFP data has highlighted a jobless rate rise to 7.3%, with a payroll increase of 204,000 jobs. Nomura's Matthew Slade is on the phone now to walk us through market response. Matthew, firstly, can we still see the impact of the US government shutdown in today's figures?
The unemployment rate picked up 0.1% to 7.3%, primarily due to the government shutdown. The participation rate took a big hit, dropping 0.4%. The employment population ratio dropped to 58.3%. The federal government were retroactively paid during the shutdown, so they were counted as being on the payroll during the survey week. We thought we'd see some weakness in the private sector, where there are private contractors working for the government, and they would not be on the payroll during the shutdown. But the strong figure shows that this didn't materialize in the data. There was a high response rate in the establishment survey as well, where the payroll numbers came from, because they were given an additional week to respond. So this suggests that today's number is more accurate than the normal first estimate that the BLS receives, and implies that it's unlikely that we'll see substantial revisions in the next 2 months.
The cable is struggling to settle in this week's trading. What is your anticipated response for this pair to these NFP figures? And similarly, as US and UK data continues to seesaw, what for you will be the driver for pound dollar?
Yeah, I think the cable's been an interesting one. So we've seen now improvement in the UK economy gain traction. So we've seen the improvement in the soft data, and that's fed through to the hard data. And so far, this is continuing to play out. Cable has over the last 6 weeks has been fairly range bound. So 160 being the support level, 160, 162, 162.30. Has provided resistance on the top side. If we see improvements, if the improvement in the US data continues, then I suspect the price action we've seen in cable will continue. So it's likely to stay range bound. We're going to, really, because you've got two fighting forces. We have been long sterling, but we've expressed that by funding long sterling using Stocky, which we've had running for quite a while now, and more recently the Swiss franc as well. And that's really been on the basis of playing this sort of cyclical divergence between the UK versus other countries, which are just struggling to gain traction and seeing demand fall for their currencies. And those actually are long sterling versus Stocky has been playing out rather well, and likewise for sterling Swiss as well.
Matthew, what then will be the next item on the USD Watcher's diary? And which US dollar cross would you encourage Dukascopy TV viewers to look to?
We're seeing IP next Friday is going to be the next important data point to focus on. It's the next GDP-related data release. So that's really going to be the next important data point. And it's actually fairly quiet up until next Friday. I don't think there's much out of the US at all until next Friday. But the IP is going to be the next important data point to watch. And you're also looking at dollar crosses. Dollar crosses to watch for now, but I would think dollar yen is probably going to be the cross to focus on. If what we're looking at now is whether the US economy is going to continue to improve. Now, clearly, it's demonstrated its resilience. We had better GDP out of the US yesterday, although that took us up to end of September, so it didn't include the US shutdown. But today's non-farm-payroll figure shows that the US economy, its improvement is pretty resilient, and the shutdown didn't affect it as much as the market expected. So if the improvement in the US economy continues, we'll have a sort of double positive in the medium term, because although tapering expectations have now been pushed out, and we're calling for tapering to come March next year. Tapering is going to be discussed more, certainly say in the new year, January, February time, if we see continued improvement in the US. Dollar yen could see some upside pressure there to next year. But for now, the data releases out of the US are going to be really important, and are certainly going to place upside pressure on dollar yen. So it's going to be data releases. US data releases going to push the dollar higher, and also that would create more of a risk positive environment, particularly as data from the Eurozone hasn't been too bad, and in the UK, we've seen improvement. In China, the data is also, particularly PMIs, have also been surprising to the upside. So that's generally quite a positive environment for risk. So, under that kind of environment, you do see demand for yen tends to fall. So I think that generates an overall positive picture for dollar yen. So I'd say that would be the currency cross to focus on at the moment.
Matthew, thank you. For more currency news, stay tuned as Monica Gibson will be back shortly with a look at euro pairs. Goodbye for now.